right. Let's see. You should be seeing the Forex Factory calendar. Cool. All right, so you can see this is tomorrow's calendar. I'm taking a look at what's ahead for tomorrow. Today, we have pretty much a light calendar until around factory orders at 10 o'clock. So I want to kind of like just breeze through the charts. I don't think we're going to see too much of a move. Last night we had something that came to fruition, but we weren't looking at the markets together, so that'll be pretty much hindsight stuff. So I'm going to try to avoid doing that as much as I possibly can. We have FOMC meeting minutes released today at 2 o'clock, and then 9:30 tonight we have trade balance for Aussie. So we might see something in the Asian session tonight, maybe, depending upon what sets up today at the close. So hang on here. Let's go over to the charts. All right, so let's get this over here. Get this box out of my way here. There we are. All right, so we have the dollar index. Came up and hit the 96.35 level I was aiming for the last time we spoke. I think it was Monday by a pre-recorded session. I mentioned that was going to be a level we would probably see reached for. And it took until today to get there, which is pretty much expected on this week. The week of 4th of July in the States, it can cause really erratic price action. But what I'm really interested in seeing is there a willingness for stocks to start going lower right about now? Okay, so we're on a seasonal watch list of expecting equities to go lower. Okay, so we're at like that midpoint of the year. We're in the dog days of the summer as well. A lot of the volume is going to start falling off. August is traditionally the big vacation month. Everyone puts a lot of money on the sidelines and goes and does family things. And they prepare and wait and strategize for what's coming in the fall because they want to be making the most of their time and effort and money and assuming the proper amount of risk in the right things that potentially could move. Well, if that's the case, they're going to be doing things in August to prepare for that because they don't make the decisions on a whim. They don't just turn on a chart and say, oh, look, I'm going to trade $50 billion worth of something because it just looks cool right now. They've done a lot of the research that leads to them coming to that conclusion. So we kind of like follow that as a model as well. August is a light trading month, which is why I want to be focusing on the PDF file. So everything that we've learned with the completion of this month too in July, we're putting it all together. So that way you're doing this, don't do this, all that. So it's a complete top-down, step-by-step process. So that way you can go back through and say, okay, I know why I learned all that stuff and what you're supposed to be doing with it. Because I know some of you are still scratching your head saying, okay, I learned a lot of stuff, but I still don't know where the pieces fit. And that's intentional. It's meant for you to be aware of it, but then not really understanding it completely until August. That's why it's a 12-month course. So it is what it is. So the dollar index, there is, I'm going to put the questions box. I can't see anything you're saying. We have our low right over here, the lowest down close right in here. So it takes us right up to this area where it was rebalanced as well. So right above that, we have that gap in here. Okay, but now inside this gap, there's a couple different reference points I want you to take a notice of. We have this high with this high and this high. Right here we have equal highs relative, and we have this high back here. So this high, I'm going to ask you rhetorically because I'm not going to check. You should all be saying what it is anyway. This high was a event that we look for that can be traced back to a specific order block. So to this high, right in here, what's resting above this old high before this rally up was buy stops trailed down. So the stops were taken, so we have to go back to find the point of which it started its rally. Here, not this one, because we had a run on stops, so we have to reference this one. So now we have inside the gap, we have this level here, which is a breaker. So it's a bearish breaker inside a fair value gap. Notice almost essentially the 50% of the gap from here to here. Let's measure that just for spits and giggles. Right almost at dead, well, I feel obsessive this morning. The equilibrium price point is almost right there. So, I mean, how you like that for geometry? So we have a lot of reasons to suspect that 96.85, 96.90 level could be sensitive. So it may be reaching for that, not just hitting this and going lower. You might need to go up into this level here, close some of that gap, and leave this portion up here of this gap range open. It doesn't need to close that in. So I'm going to highlight that so you can see it. So that way it'll also be there in my charts this afternoon. So we'll be looking for this kind of like act like a brick wall. If it trades through this, then this is much more significant low. And that's the price we pay. We don't have to demand that it's the actual lowest low and the highest high. We just need that meet in the middle. All right, so that's what we're looking for, 96.85, 96.90. Could spike to 97 big figure just to make me look stupid, but that's ultimately where we think it should all, find resistance. If it goes through this, then everything changes, and we may be needing a longer-term consolidation, or we could turn the tide, which will have to be seen at a later time because I can't forecast that. And let's get discount to premium range. And that puts us up at the 62% retracement level as well. So it's a nice confluence at that 96.85, 96.90 level. And it could be defending that big figure 97 in the process. So be aware of that. So it's not much of a range on the upside. If we hit this and stop and roll over, then that's all that's necessary. But if we go above it, that's what I'm saying. If we go above this old low here, we'll need to go back up into the breaker that's inside the gap. So there's two reference points. When it's like this, you have a couple different conditions and a couple different decisions. So it makes it one step more in the analysis, which means there's less probability because there's two levels to consider, this one and then this one. Now, it's not much in terms of range, but it is enough to make you think, which one am I going to wait for? So let me ask you something rhetorically. If we're looking for setups, if we're looking for conditions to trade on, is this one that you would take in your trading plan? I'm not saying that it's something wrong with either one of these levels. I'm just saying you need to start thinking because we're getting close to graduation in this mentorship. So when we look at setups and conditions in the marketplace that would pose a potential outcome, higher or lower in price, is that condition one that you would consider? In other words, would you look at this overall structure of price and say, okay, I would trade this one, or I would trade this one? Or would you say, okay, I'm going to take this one. If it fails, then I'll take this one and be willing to be wrong twice? Or would you say, well, I'm going to wait for a much more cleaner level? There's nothing wrong with any of those. I'm just asking you to start thinking like this because your steps forward past August, I mean, we have 3 months of question and answer, but you're going to be refining your trading plan, your model of trading. So when we have these situations and conditions in the marketplace, I want you to start thinking, is this a setup or condition that fits what I want to do? Because in my personal opinion, what we'll see is a large collective group of you will say, well, I like the levels when it's just one. When it's one level, I know what I'm looking for, I know how it should react, and therefore that's my setup. Where other folks in this group will be a lot more action hound, and they'll say, okay, I'm okay with being wrong in this one, because if I'm wrong, I know I'm going to go to this one and be fine with that. They are the ones that aren't concerned about high accuracy. They just want payouts, and they can do that, but they're not worried about being wrong sometimes, or more wrong than others if they wait for just one level. So you got to be thinking about those types of things. So the analysis for the dollars, we're looking for the low to offer resistance. If it fails, then this is the level we should be looking for. Then either this one provides selling pressure or this one provides selling pressure. If either one of these give way, I'm sorry, no, I shouldn't say it like that. If the second or highermost one gives way, then we have to reference this as a potential turning point, and then we would look for the levels down here to act as bullish support. All right, so we have the euro pound still in a heart attack. It can't get a clean reading. Looks like a really bad EKG. The range still, I like this up here. I really like this little pocket of price action where I think they'll fill that in. And we have a little bit of sell side liquidity resting below here. And of course, Bailey's going to play with a little piggy now. ICT, you're really running a circus act here. It's not professional. Hear all your dogs in the background. This is not natural. It's all part of the ambiance. All right, so the euro, we're trading a little bit further into this area, which I didn't want to see. I want to see this act as support. So we have potentially this whole entire range could give way and need to come back to this old high, which in this case would be beneficial. I mean, it doesn't have to stop here. It'd be better had it done it. If it gets down to 1280, that gives us a range of, get on the right chart here. These next 2 months, folks, are going to be interesting because I have not only my pups I have to keep an eye on, because my wife's simply not going to be waiting around the babysit. She does her things, but the kids are also home too, so I'm dodging the normal outburst. Dad, he has my Nerf gun. So we have optimal trade entry in here. OTE lays right on top of this down close candle right there. So let's play devil's advocate for a moment. Say we lose this entire range here and go below 1280. This is the closure on the gap as well between this candle's low and this candle's high. So we have a fair value gap in here. If this order block does not send price higher, then we will be looking for this to go lower, which is probably obvious. You know, of course it would be, Michael. Well, not necessarily. It could go down to below here, just below this low, and then rally again. But I think personally we should see 1280 offer support. And again, that's in line with what we outlined for the dollar for a potential move up into this secondary level for resistance. So let's keep that in mind as well. I'll talk about this in a minute when I close, towards the close of the video. And then cable, I think we'll see 2860 now. It's got its gap in here still. Let me close this down. We don't need to see that anymore. And I'll put this here. Yeah, what's that high? 128.62. All right, so we got 28.62 downside closure on this range or void. If this gives way, we have a small little pocket of fair value right in here. If we lose it, in a way I kind of hope it does, because it'll give me that run on the euro pound. I want to see that range up in here fill, and that would do that. But back to cable. If we bounce at 28.62, that would be a nice area to find support to rally up and go for a run on that 30.55. So this week's range, I believe we'll see 33.55 as a high objective, running through that like 30.65, 30.70. And on the downside, I think the lowest on the range would be the 27.60. So which side of the marketplace we reach for first? Honestly, I don't know. We'll wait for either one of them to give us more insights about which side the markets are going to reach for. It is still a shortened week because of the holiday. There is the tendency to act erratic because of the 4th of July tipping point. It usually can happen in this time of the year. So either one I'm okay with. If it runs up first, I'm not looking for it to sell to go down to here. Let's put that in perspective. I'd rather see it go down here and then make a run. Because if it goes down here, what's going to happen is naturally everyone's going to say, okay, well, this is a double top, so let's get short. And no, because the backdrop is we've had sell stops below here. They got ran out. Then they got ran out here. Fair value got filled in and then rallied. So we might have to reload. And by coming down to this level here, that would give us a really good setup for a longer term move higher. And let's get a view on fair value on this one as well. Boom, look at that. 62% retracement of labels, right on that. I'll make a course about this. So if we see that that's a overlay on fair value and optimal trade entry, that level to me, if you're one shot, one kill type of guy or gal, I'd like to pull out the guru rocks and burn some candles and wait for this thing to drop down in some mantras, prayer session. That we go down to here to this candle's high at 27.62 is what, no, sorry, 27.61. So it could spike to 27.60 is a round number. But around 27.65, I think that's a good level to reach for. If it trades at that level, that'd be a nice buy. And the reason why I'm saying 27.65, 27.70 is because we also have this whole business here. Watch how these things overlap. Ready? Watch. We have two down closed candles, which makes one large order block that's bullish. This candle's opening comes in at 27.79, roughly 27.80. We also have this whole drop down, which took out this entire cluster of lows, which would be residing below that sell stops. They were taken. So we see this as a bullish breaker right in here. Now, which one do we use? Because we have all these wicks and stuff, I'm just going to say right here, I like this body, this candle's body right here. And look what it does. It's encapsulated by this range of fair value. So think about all the things that's being shown here. All kinds of Crayola time. And I say that facetiously because I had that guy's video removed from YouTube. So anyway, I ain't going to say his name just because I don't want it in my work, but I'll talk about it after the recording if you guys want to talk about some things. We have a bullish breaker right in here. I like the body of this candle. It's inside of the fair value gap, and it's got a bullish order block, and it's optimal trade entry, and we expect these levels to be wiped out. So that, to me, is the one-shot, one-kill setup that could come to fruition. Now, let's play devil's advocate a little bit further with this one. Let's just say this thing just messily drops lower, and finally gets down to this point here, and it's Friday. Do we do anything with it? I believe this one's worth taking and carrying over the weekend if you get it. If we get this, I think it's something that we could take and hold. Folks are still texting me during the live session. Please don't do that, folks. All right, so I think this is a nice buy. If we get down to 27.65, 27.70, yeah, obviously you got the fact that it's spread. That'll probably put you at 27.80. Not a big deal. Your stop would have to be below this candle's low, and we'll just call it 27.05. So let's do that. Let's outline it so that way it's in recording. That way I can go on Twitter and tell everybody how smart I was again. I don't have a Twitter, folks. I'm being bad again. And that's the setup I believe is going to happen this week. Now, it could never get down. It could just simply never trade that low. Okay, now you saw what I just did there. I used the order block as the beginning point. Why ain't you got on a swing low, Michael? Well, if this is going to be where it rebalances, because this is a fair value gap and it's a bullish order block, that might be all that it requires to go lower. So now we can apply Fibonacci retracements to those reference points. They're anchor points now. I didn't think I was going to learn something today. Well, you just did. So when we have fair value gaps, if we see them acting as support, why would you need to always go to a swing low? You can now apply it to things like this. And now we have a new science and technical analysis applying fair value gap, which will act as real, natural support and resistance versus runs like this below the low where it creates that low. Yeah, you can run fibs from that to that. That's everybody. All the schoolboys and schoolgirls are doing that over baby pips. You're graduated beyond that. So now we understand if this where we see price retracing, we can start our fib there, okay? And while it may never trade there, that's a logical area to act as support. So if support is what you draw a fib up from to get retracements, why is it not being used here? Because they don't know it. They don't understand it. So by applying it to the gap and the order block, projecting out to the high, you get this area right in here. Look how that 62% retracement level lays right on top of the 2862, which is the top of that gap, or the bottom of the gap that's remaining still. See that? So now we have a couple different price points to look at. 2862, I like it a lot. If it fails, no big deal. I'm even more excited about this one here. So now I have two stages of levels that we have to watch. High risk, not high risk like it's not worth taking, but it's high risk in relationship to what's down here. This one, if we can get down there, holy cow, I will be going an inch long. I'll be on the leaderboard. Let's put it that way. That's where I think it's going. So I really want this set up. I want this buy. If I can get that, then my live accounts will start seeing some life. This one here, I might do a very, very small position, but I'm okay with getting stopped out, knowing that I can reload down here. Okay, so I wanted to talk a little bit about Euro, because I was obviously among friends and family yesterday, some of which I really wish I wasn't around, but you know how that is. I'm sorry, I shouldn't talk like that, but I'm honest. You know, there's people in your family, you're just like, man, I got to see this guy again. He's going to want to talk to me about things I don't want to talk about. Kind of like some of you guys when you come to live sessions, you want trade signals, and I'm sitting there talking about Bella and Bailey and their chew toys squeaking in the background. All right, so there was a specific reference point right in here I'm going to look at, and if I can get this chart to drop down to a 5-minute chart. Let's maximize it. Really get a good view on it. And I'll scroll it over here. Well, it was already done that, right? No, it didn't. There you go. So I was among family members yesterday. And of course, naturally, every time I get around family, the first question is how much money are you making now? You know, what have you done? What are you doing right now? What's a good stock to buy? What's gold and silver going to do? Should I buy this and should I buy that? So it's really never a vacation for me. You know, I'm always being inundated with this stuff. So naturally, one of my uncles, you know, he has a son that I'm not too close with, but he's like, look, you know, why don't you teach my my nephew how to, well, my son how to do this, because you taught my nephew, which is one of the closer cousins of mine that I have actually tried to teach the trade rather. And he says, look, you know, why don't you teach him like you did so-and-so? And I was like, well, I have really no time for this, but, you know, what do you want to know? And I'll try to give you some pointers. He says, well, what are you doing right now? I said, well, I trade Forex. And he says, well, what is that? I said, it's currencies. He says, all it is primarily just currencies. Okay, can he do it? I said, well, anybody can do it, but can they do it properly? That's the question. So he goes, well, that's what I want you to do. Teach him how to make money. I don't want him losing any money. I was like, well, I can't do that. You know, no one's able to do that. And I would subscribe to that guy or girl that can teach without having to lose. But I can show you some things that line up. So he's like, well, show him that you know how to do it. Like, go in there right now and do something. I said, well, it's kind of like 4th of July. What do you want me to do? He's like, well, just do something. Do anything. And I was like, okay, well, let's take a look at the euro. And I was looking at the euro. I said, look, this is what price is doing on a 5-minute chart, because I had to show him something right away. I said, price is going to run. It's going to go up, and we'll probably see it go up to 1370. And he's like, what's 1370? I said, well, it's this level up here. I drew a line on it. He goes, well, why? What makes you think that? I said, well, I think that everything acted like a ceiling up here, and there's a little high up right here, and anyone that's been making money, they're going to have a stop loss that protects their position right above there. Now, I didn't go into great detail about what makes this a fair value gap, because that's what it really was. But the long and short of it is, I said, look, I think it's going to go up there. And if it goes up there, I think that would be a good point to get out. And there's lots of trades that make a lot of money. There's a lot of trades that give you a lot more range and stuff. But you're kind of like putting a gun to my head and do something right now, like a trained monkey. Throw me a quarter and I'll dance for you. So I just said, okay, look, we have equal highs in here. Same scenario up here. There's a bunch of buy orders. I think they're going to run those, but generally there's 2 ways to play it. Run the buy orders to stack and build more, to run to a higher level, and then use this as a springboard for more buying, or they can run above buy stops to take that in reverse. I felt that they were going to come back up here and rebalance, and that was the idea I did. And I just did 3 minis real quick in front of everybody. And when I wasn't saying, look at this, like a party magician, but I said, to my cousin, I said, look, you can do these types of things. I don't like to do these things, but you can do it yourself and trade like this and do it a couple times a week and do more than you earn at your job. No way, no way, no way. You can't do that. I was like, okay, well, yeah, you can. You can do it, but you can't do it right away. So I told him, I said, we're going to run above here, and I simply put a buy stop order on. And I was buying on a stop. And I said, if it runs above these equal highs, I will buy that. It will get me in going long. And then I'm going to wait for some measure of retracement, and then I can move a stop loss up to protect it and wait for it to go above the short-term high. And if I'm not mistaken, let me go over here. Give me a second. I got to switch it over to the screen. All right, that's not it. Hang on. It should be a website chart. Can you guys see that? Okay. So I had this fair value gap in mind as I was talking to him. The equal highs in here. The buy stop was filled right above here, so buying on a stop, which you guys haven't seen too much of me doing, but you'll have rules for it. Then the first retracement down, and then rallied away. That gives you a reference point for stop placement. Trail the stop loss up, and then reach for here. I actually have the screen capture. I'll put the link on so you guys can go. It's just like this MQL505, whatever this stuff is here. It's the actual link. You got screen capture where it had my stop loss order, the limit order getting out. Now, I know sounds like I'm making a big deal of all this stuff, but I do this to show you that I'm not personally trying to actively trade on 4th of July, but I had family members asking me, hey, can you do this? Can you do this? So it's not like on Twitter or on America Online, not America Online, Facebook and YouTube, do this, prove. I mean, they see me not working. They see what I drive. They see where I live. They see what I do. But they have to do it. They got to have that cookie that, let me see it done. Prove to me. And, it wasn't that much of a move, but it was a little bit of a range. But look at the reaction up into that level here, right here. And then let's go back. And again, I'll share this also with a chart that has the actual orders. You can see I actually did take the trade. But let's go back over to Euro. It went right back to excuse me. It went right to the bottom of the gap. Right at the bottom of the gap that's over here. Okay, there's a lot of talk about supply and demand stuff, how accurate it is, and all that stuff. Nothing gets this precise. There isn't anything or anyone walking the face of the earth that gives you this level of precision. It doesn't happen. That's where I got out at, and then overnight, look what it did. It went right to it as acting as gap support, which is gap resistance for selling. Right to it, boom, and it sells off. That's phenomenal. It's crazy. And I gave them the 1370 level yesterday before the fact, right ahead of all these highs being taken out. So I say this to say, not showing off. I'm not showing off, but the point is, there's always setups out there. Just because my frequency level of trading is very, very low, it's mainly because I don't have the time to focus. I'm getting slammed with questions, and can I call you and ask you a couple questions, or can you help me with this? Can you do? And I'm always, all day long, and most of the evening, it's going on. I wanted to set like hours to it, but even when I'm around my family, that stuff goes on. So I say this to tell you, when you complete the mentorship and you start getting consistent and you're doing really well, if you want your time to be your time, don't talk about what you do. It's going to be hard for most of you because you're going to be crazy, like excited about it, because you're going to be living your dream, doing what you want to do, and it's going to be a second stream of income or a complete new income stream where you don't have to do anything else but just this. That's going to be based on what you do in your learning and how you work towards using the information. But if you talk about what you do, you're never going to be away from it. And I say this, that it's healthy to be away from it. Yesterday, I was looking forward to being away from everything. Like, I wanted to be completely unplugged, and I still couldn't be unplugged. And it was just like, you know what? They tapped me on the shoulder, and here's my family, the ones that criticize more than anybody, more than any troll, and they see how I live. So if they're asking me to do something, the man in me that feels like they have to be the person in the center of the stage all the time, that's what it forced me to do. When I should have just said, hey, look, there's nothing for me to do today. I shouldn't be doing anything today. But because I was more or less challenged, but not directly, but that's what I was being done, I acted on it. So while I was right, I was accurate, and it was a profitable little doohickey of a trade, I should have said no. So what I did was I actually gave in to emotional stimuli where I shouldn't have. And this could have potentially caused me to have a small loss. And if it would have done that, it would have been killing me today. It would have been killing me. It would have been bothering me. But I'm telling you, even though that it worked out, I wish I hadn't done it. So the question came up a couple weeks ago, why is it bad to show off? Or why is it bad to have, I think it was show off. Why is it bad to show off? Because it just stimulates more an interest for you to do that. You get a release of serotonin, and it feels good. It's kind of like that little feel-good thing you get when you put a video on YouTube and you see the likes. I don't care about the likes. You put a tweet on Twitter, and how many how many favorites you get or retweets, that releases chemicals in your body, just like when you get a winning trade. It gives you that release of chemicals. I'm addicted to that. That's me. That's my problem. I have an addiction to that because it feels awesome. Because most of the people I live around, they have like high-paying jobs they go to, but they're gone all day long, and they just tell they tell my wife and they tell my kids, well, your dad or husband, he sits on his rear end all day. What does he do? We don't ever see him do anything. Well, it's none of your business what I'm doing, number one. But the point is you don't want to be creating a condition that you rely on that stimuli. You want to be building your trading plan to get to feeling good about doing the process. And it's hard. It's so hard. I still have not mastered that because I'm so used to and addicted to the stimuli aspect, because that's how I started. And that's the reason why all of you have a greater advantage over me. If you chase that stimuli, if you chase that superstardom, if you chase that I feel good because of this, you're going to follow the same road. It's just going to be a shorter road than I did. I went through a very long, painful road of it. But you're just end up in the same situation where your emotional and psychological and physiological stimulant that is released by these exposures to risk, and when it works in your favor, you chase that. instead of chasing the process of following a plan and sticking to that. I should have never did that trade yesterday in front of my family. I should have never did it. But I did it because of who I am inside, not because of what you see outwardly that's been shown through teachings and tutorials and all that stuff. The person in me that feels like I have to do that to prove, and then I know if I am right, then I can stand on my high horse and pedestal and look down at everybody. That's not a characteristic trait that you should be aspiring to. Some of the younger guys in this group are actually starting that whole journey, and I'm warned not to do that, but you're still doing it. And I know why you're doing it, because it feels good. It feels bravado. It feels awesome. It feels empowering. But when you get like me and you're pushing 45 in a couple weeks, you look back and it's foolishness. It's silly. I wish I could go back in time, and I'm going to say this in closing because there's really nothing to do outside today, our discussion here. I gave you the levels I'm looking for this week. In closing, though, I wish I could go back in time and undo all that, because I believe, number one, I'd be a far better trader, a far more balanced emotionally and psychologically about how the markets push me around still psychologically. I don't want to give the impression that it's fun to do what I went through. Like, I know some of you are saying, well, I want to go through the fun stuff he went through and avoid all the painful stuff because I think that'd be great. No, it's not. It's still the wrong way to do it. You need to be getting addicted to following the rules, and that's something we don't like to do as humans. We don't want to do those types of things. So if you're feeling those impulses to do that, you have to find a way. And here's the thing. I don't know the answer to it, but you need to find a way not to do those things. You have to be rigid about following your rules, following the process. And some of you are saying, well, what are the rules? Well, you'll get more of them this month, for finding the big trades from every asset class. And then next month, that's the whole business. We're down to the brass tacks. This is what you do day by day. This is your daily routine. This is your weekly routine. This is what you do on a monthly basis, a quarterly basis, what you're looking for, how you keep notes about what your setups are going to be, how to break down the marketplace for swing trades, short-term trades, day trades, scalps, how you're going to act on it, what you're going to do, and weigh out all those options. It's a lot of stuff, a lot of stuff. And after August, most, if not all of your questions are going to be answered. It's done. And then it'll be a couple different fine-tuning questions about, okay, so if I do this, I just want to make sure I understand this correctly. That's what it's all going to be like. And then in September, we're going to be sitting down and getting ready to do the whole top-down analysis for the equities market, so we can pick out what the strongest stocks are, and then go through the commodities markets and do those same things. So everything that you're going to be actually learning over the next 2 months, we actually do it. You'll actually see me do it in a pre-recorded video where I'll sit down and go through the whole process. I'll talk out loud. Everything I'm doing it. And I'll probably have Cody in kind of like in the conversation, so it gives me someone to talk to kind of like explain this is why I'm doing this. Because if I don't do it like that, I'll probably skip over some things because it's just, I've been doing it for so long, I don't think about it. So I kind of like want to use him. So you may hear him talk in those September presentations, but that's the direction. That's where we're going. That's what it's going to be. And in October, November, we'll just end it with any fine-tuned questions or whatever. I will be trading London and New York sessions in front of you folks. That's outside of the mentorship. That's not part of the mentorship, because I want you to see how I use the information. But you're also going to see that I'm not trading every day. You actually see why I trade once, maybe twice a week, the setups I'm looking for, the way I outline the cable. That's what I'm looking for. That's the setup I'm looking for. So I got a couple questions over the the weekend. What's going to be taught? Are we going to be doing any of this? Are we going to do any of that? Yeah, it's a lot of content, and I have to get through it. So you'll have everything that makes ICT tick internally about technicals and setups and all that stuff. But the main takeaway is you'll know what you want to do and where you're going to go. I mean, it's a phenomenal amount of information. It's fun. Number one, it's fun. And you'll save me a lot of question and answers when I post a video, me actually breaking down the stock market, which stocks I think is going to move, the commodity markets, which ones are going to be moving, and then ultimately what currency moves are going to take place the last quarter of this year. And then we'll watch it come to fruition. and then your confidence level will go through the roof. You'll feel empowered, and you'll also look back and say, okay, now I know I don't need a whole lot, and I waited the majority of this year until the mentorship portion was done, and then I can grind out that Robbins contest and take the leaderboard over. And that's that. And I'll go on YouTube and do a victory lap at the end of the year, and that'll be my last exposure to ego, because I have to do that, and that's just me. So that's going to be it for today. There is, hang on here, one more quick look across the board here. Yeah, let's do a real quick look at dollar CAD. So we took out our lows we were looking for. We aimed for it from back here. And let's see what that low was. $29.69, so 29.69 was our target. We reached below that. It did that. The low so far has been 29.12. So nice little move below there. I do believe we'll probably see it want to rally up. We have a gap in here, but I'm not thoroughly convinced that it's going to go all the way up and close into that. So 131 big figure could be a level that it may reach for. I'm not saying it's a buy. I'm just saying that if we get up in here, 131 might be the ticket. So that gives us about the mean, not the, well, let's get the middle equilibrium. Let's get a range on this. And what I'm measuring here is this little consolidation. And all this balanced range, equilibrium, and let's get that on our chart. So the 3090 to 31 big figure, I think that could be a level. If it gets to that level there, that may be a nice sell. And we could be reaching for fair value gap below here. And the sell stops resting below there. So we have a nice continuation lower. And again, that's if we get the rollover on the dollar index on either of these two levels I've outlined earlier in the video. And that's going to be it. I will do, hang on one second. GBP COT data seems at stream commercial short. Could you please go over in daily recap? I'll take a look at it here. I'm not sure if you can hear it, but Bailey is trying to show Bella. She's a big girl now. Hold on one second. All right, so apart from anything crazy, do you have any questions before I escape? I don't know what's going on with bar charts. I haven't taken a look at it. Someone stated it's GBP is stuck on the 19th of June. I'm not sure. Mega trades are all of the asset classes and all of the, like if we look at commodities, we'll be looking for the strongest metal. We'll be looking for the strongest meat, the strongest grain, the strongest food, like coffee, sugar, orange juice, cocoa. What we're doing is we're actually going through all the relative strengths and picking out the strongest moves or the weaker moves, because it could be a weaker move too. But the same thing for the stocks. We're looking for the strongest industry groups, sectors in that group, and then we're looking for the strongest leading stocks. And we're going to do the same thing with index stocks as well. You will have a complete immersion of every asset class, of every facet of what makes me love these markets and why I've been so passionate about it. You're going on 24 years. It's crazy, but it's amazing how fun you'll find. You'll never probably do all these asset classes, but it's so fun to do. When we go into the fall months, that's an exciting time. I love that time of year anyway, but as far as the markets go, it's the nicest time of trading. It's the greatest time of trading. There's so much reason for it to be moving around, and it's good to trust it. It's nice. It's a good feeling to trust it, which is why I started the mentorship, when I did, September. I knew we'd come out the gate and my technicals would be dead on, and we're getting ready to go into that same time of year, and it's awesome. So yeah, we'll be talking about the metals. There's a lot of information to be exposed to so far, and there's a little bit more you'll see this month. But all of August, you'll know exactly what you're doing with all the information and when and why. You basically got all the ingredients been given to you month by month. You actually get the recipe for everything. Some of you, looked at these teachings and thought they were complete standalone, but they're not. They're fragments. They're fractals of the greater whole. Are you going to teach future and options? Yes, futures and options. Dollar index has strong seasonal tendency to go lower beginning in July. However, we are already deep in discount. Does this worry you? Nothing worries me, except for being inundated with a lot of work around September that would distract me. So that's why I'm trying to do my best to make sure all of your questions are going to be answered between this month and August, so that way I can just do it in front of you. All right. Yes, I was just thinking about the same thing, Arnold. This year has flown by. This mentorship has flown by. We're in the last 2 months, folks. All right, so North Korea, I don't know, to be quite honest with you. I was wondering why we haven't done something already. So who knows what they're doing. Can I tell you how to keep motivated when you are having a period of not making money? Can you tell us how you keep motivated even when you have a period of not making money? That's what your journal's for. And when you're right, that's why I get excited about the fall. I know historically I'm very, very accurate in these months that are coming up, September, October, November. That's like the sweet spot for me for trading. And because I've been doing it for so long, I stay motivated because I know seasonally and historically that my concepts work very, very well. And it shouldn't be of any surprise because it's based on what smart money's doing. So when's the smart money going to be most active? Those months of the year, because they have to be pushing to get their targets for their year income. All the markets are being pushed around to get to the end of the year. So there's no reason to feel like, well, I'm not making money right now. Well, all those things you're feeling right now, they're all neophyte, and they're all, newbie feelings. Not that you're completely a noob, but it's a newbie feeling to feel that way. Once you've done a couple of years of seeing this stuff over and over again, you lose all that fear, you lose all that excitement about it, to the point where you're losing your mind. And you stay motivated because of that. Again, every day is not an opportunity for you to be in there. There's an opportunity every day, but it's not an opportunity for you specifically and uniquely you every day. And that's what makes this stuff hard. Each one of us are going to have simply a totally different perspective on all the tools I'm sharing. You'll have a game plan based on what I'm teaching you that'll be different from, say, 20, 30 different people in this mentorship. All right. I'll cover the stock option stuff when we get into that, John. Why did you choose that breaker and not the one directly out of the high on dollar index, which also lines up with the gap? Don't know which one you're talking about for that. Yeah, in August, I'm going to give you all of my MT4 indicators that I use and like. There's a couple of them I'm looking at still. I'm going to share them, but I'm not actively using them. There's some things I'm looking at. Some people have made some things for me. I found some things on the internet that I like. But everything that I have that I use for MT4 purposes, you'll have that in August. It's not a ton. It's not a lot of them now. Just above the breaker currently marked out. I guess that would be better if I could see the chart. This box is in my way. Hold on 1 second, let me shrink it up. The recipes are going to be how to cook whale and lion, and a little ditty called Simpleton Gumbo. All right, so yeah, if once August payment, just so you guys know real quick before we say it, the monthly payment that's made for August, once that's done, you should be 12 months in. Okay, 12 months payment should be paid, and after that, you guys have access to the PDF files and all the extra stuff that we do in the fall, questions answer, and in any updates I do and reviews that I'll pop up here on a weekly basis starting in February next year. I'll be throwing something entirely different. My YouTube channel is going to get active again in October, but it's not going to be none of the stuff you're learning. But I will be applying weekly stuff to you on a weekly basis. There'll be just a one ongoing thread that I create that just has a new updated saying once a week where I kind of like give you where I'm looking for the week. I'm not going to be sitting here day trading in front of you or trading, and I'm just going to tell you what I'm looking for that week to unfold, and you guys will have all the information to trade that on that accordingly. You'll know exactly what you should be doing based on that. And some of you will say, well, I'm not going to take that trade. I'm going to do something different. Some of you may even want to fade that, and it's all entirely up to you, but you'll have the tools to do that. But hang on. Let me see here. But yes, at the end of August, the payment that you make in August should be your 12th payment. You should not be keeping your auto payments on after that. So you got to turn it off. As soon as your payment processes and you know that the funds have been taken from your bank or credit card, go into PayPal and click on your profile and then cancel automatic payments to Inner Circle Trader. And once you do that, you'll never get rebilled again. If you need assistance with that, I'm asking you all not to do this because it's a lot for me to go through. PayPal is such a slow, cumbersome website. I got to go through all kinds of hoops to get through that, to get to your profile and then cancel it. That's why I ask you all, if you are leaving the mentorship, please do that because it's a pain in the rear end to go in there and fix it. And some of the members actually forget to do that when they cancel, and it rebills them. Oh, he's billing me again. I'm not billing you. I can't take money from your credit card. You're the one that supplies it to PayPal and leaves it on. So at the end of the mentorship in August, make sure your payments, once August payment has been paid, go into your profile and just cancel the automatic payments, and it'll never be billed again. I'll remind every one of you when I've received everyone's payment, because there's usually like 2.5 weeks after all the payments come in where nothing is expected to come in at all because some of them stagger in. Once all the payments have been received for August, I'll let everybody know, go in and cancel your profile now. So that makes it easier. All right. Yes, you have to sign for August to get into the September questions and answer and to maintain your activity and access in the group. So there's still a satisfaction you have to do for August to continue on. I had 4 people leave this month. One of them, she was very excited about what she's learned and she's confident she's okay with it, which I was surprised, but I'm not twisting anybody's arm. Do what you got to do. And the other 3 they just left because of whatever reasons. I know I don't understand why you're leaving now, but it is what it is. Everybody has their own reasons. What about the people who joined in January? Do we have to pay for September, October, November, December? You will not. If you started late and you don't have 12 payments in, you will not have the PDF files. That's all part of the terms of use, and everyone signs that every month. If you didn't get a satisfaction or intent to continue emailed to you, just send an email to me at innercircletrader@gmail.com. Cody will get to you this afternoon with that. You want deployments. All right, what was I going to, I was going to say something before I closed. Forgot what I was going to say. The PDF file is a complete top-down analysis where if I put the PDF file on a file sharing program and made it public, nobody would understand it. You all will understand it because you know certain things and the jargon and the things that lead up to it. But for the most part, the general populace wouldn't understand it. So it gives you a way to break down the marketplace top down from whatever style of trading you want to do. It'll help you do that from the beginning to the end. All right, folks, this is a wrap on this session. I will give you a daily recap today. It'll be up by 3 p.m. New York time. Next live session is 8:15 a.m. tomorrow. And until then, wish good luck, good trading.